Hey there, traders. It's Wednesday, July 27th, 2022, and I thought I'd start off taking you to a different scene. Anyway, no, just kidding. Hang on a second. There it is. We're looking at a cherry bomb today. Costco. Okay, that's what we're looking at. Liquidity drops 2 out of 2. So not super liquid. IV rank of 35. It's a high price underlying, higher price underlying. So we're going to have to define our risk on this one, which is, I don't know about you, helps me sleep at night. Definitely gives you a better return on capital potential as well. Also, if you stick around to the end, which does help me, so big like to you. If you can stick around to the end, that does help me. I'm going to cover some trade management of 3 trades from last week. So let's get going on today's trade, shall we? If not, if you're not interested, have a wonderful day. See you next time, maybe. All right, everybody. If this is our first time meeting, my name is Neil, and this is Option Theory. Thank you so much for joining me. On screen, you can see we are inside of Thinkorswim's simulated trading here, and I've got Costco pulled up on the charts. We use simulated trading here so we can get all the learning without any of the risk. In case you've ever wondered, could I be profitable trading options? Can I trade options at all? Do I know what I'm doing? This is the place, this is the sandbox to learn and prove to yourself before you risk your real dollars. I hope you hit that subscribe button someday if you haven't already. And if you have already, you rock. Let's get going with today's trade. So we can see that the low isn't that far away. It was back on it looks like May 20th, I think. Yes, was the low. And when we look at the bands, we've recently bounced down off the upper band, and we're nearing the middle band. So not particularly a bullish signal for me, but the market futures, as we're looking at them overnight, looks like Team Green is in the winning here. Bonds and VIX volatility going down. A pretty big overnight move here with S&P's up 1%, NASDAQ 1.6%. And so I'm thinking this is in the NASDAQ here, but, I'm not a robot here. I don't know everything. So anyway, in fact, I know probably nothing. All right, let's go to the Analyze tab, actually, and pull up today's trade. Today's trade is a vertical. We are looking to be short the 490 put and long the 485 put here with a mid price here of $1.62. You can see there's not a ton of open interest here. It's not awful, 439, 458, but I want to switch this over to vertical for you to show you here. Take a look at the bid-ask spread on this one. People are, willing to sell it for 65 cents. Other people want to buy it for $1.60. Why is it coming up with $1.62? Not really sure myself here. So that's what we're getting with this bid-ask spread when I do it the other way. Let's see what happens if I go ahead and close, delete that. I want to try clicking it there. Okay. Oh, I'm in the wrong. Look at that. See, you can be wrong all the time. This is where we want to be. Did I say the expiration? We're going to be in the September monthlies. September monthlies. Let's go over here. 490. There we go. The bid-ask spread on this one here is 95 cents to $2.30. Open interest 291, allegedly. The $1.62. There it is. We go to the risk profile here. Make sure your date in the top right matches the date in the bottom left. That's 9/17. We got our price slice set at break even for expiration, giving us a 63% probability of profit at expiration. And of course, what is our max loss? That's something that we always want to know going into our trades. So let me go ahead and leave full screen. Yeah, so we can show you what that is. I'm going to right click this trade right here, going to choose confirm and send, and show you that our max loss, of course, is going to be $500 minus the $1.62 or $162 credit that we received for $338 max risk. And that's good. That's definitely a 1/3 of our risk. We like that one. So let's go ahead. You can decide whether or not you're going to put that in an IRA or your margin account. I'm cool. It's IRA safe. So let's go ahead and do that. That's today's trade. And let's go back to full screen and let's go and take a quick look. Last week we did EWQ, which was that, I believe, French economy ETF. And I believe I had that one in my margin account. So let's go back to that one. EWQ. Yep, there it was. And what happened with EWQ was we had sold it for 60 cents. And hang on a second. These are the orders that didn't. Getting a little confused here. Go to EWQ. Cancel, cancel. There it is. Okay. So, yeah, that doesn't look all that right. 60 cents. We sold it and then bought it for 70 cents. 4 days later. They give me a trade price on here, because that's not right. Okay, here's why I mean that's not right. Because that would be a loss, right? Sell it for 60, buy it for 70. But if I go and I look at profits and losses in EWQ, telling me I made $45 on it. Well, that's a little confusing. See, I'm going to be, I will show that I am not 100% knowledgeable right here on camera, folks. Not editing that out. All right. So EWQ shows me a profit of $45, but I'm not seeing it in my trades. So I got to see. Oh, hang on a second. That was order history. There it is. Okay. I was looking at order history. Not sure what happened there, but we can see now how I made the $45. Trade history. That's where I want to be. Sold it for 90, bought it back for 45, thanks to the bracket orders, because I don't sit around and watch the screen all day. That's the EWQ, so no management needed there. GLD was another trade for last week, and that one did not fill. The final trade, GM, let's go to our activity and positions. We do have GM in the margin account. We are up 23% for a total of $13. But what's noteworthy is we've got 23 days left in the trade. So on Friday, we'll hit the 21 days to expiration mark, where we either want to decide we want to manage the trade on 21 days or at 50%. I'm thinking this might be a candidate to roll out in time, or you could potentially just take your 23% profit, max profit, and call it a day with GMs. But I'm thinking it's going to be a roll. What do you think about how you would manage this trade if you put this trade on as well? All right, everybody, if you made it to this point in the video, you'll get a big thumbs up. Thank you so much. You know, I do hope that someday that subscriber count will go up, and you being here to the end helps. All right, until I see you guys next time, may the market be with you.